2000 and 2007. Looking very quickly at the VIX, I showed this 2 months ago. We've got a downward pattern. The VIX moves opposite to the markets. So if the market is moving up, the VIX will come down. But a downward movement here in the VIX. Phase 1 change, phase 2 acceleration, and then phase 3. We've got to candlestick 11 in August. And I said we might move on to 13. We've actually got to 12. And still not quite at 13 yet, but it's indicating that the end of this downward move is coming, which would then mean a topping form, possibly in the S&P 500 and the Dow. Another ETF, UVXY, mimics the VIX. Similar sort of pattern, phase 1, phase 2, phase 3. That got down to candlestick 12, looking at candlestick 13. Shortly after the August meeting, we actually got 13, and we've actually had 14, 15, 16, and 17. So that's an extended version of this particular pattern, but only a little lower each time, so possibly seeking out a low point, which alternatively would be a high point in the market. And the volume growth during that period of the last 6 or 7 months. Bond yields, we saw a low at the beginning of last year and a rise up from there, and then a drop down beginning of this year into what I call window 2. And then we saw a low, a multi-year, if not a historic low, at the 10-year yield. Back in early 2014, oh, that's the low there, sorry. Back in early 2014, when that circle is, I predicted that we probably would see a double bottom, if not a lower low, with the low that we saw in 2012, which was 1.39. We sure did see that. We went down to 1.34, just a little low. You can call that a double bottom. The question is, will we go any lower than that? There's a potential window 3, Q1 2017 next year. So we may see a further drop down into next year as well. And if the market, the equity market, does deteriorate, then money will go into the bond market, will push bond prices higher and yields lower. So we may yet see a return to that low, if not go lower, in coming months. Currencies, just very quickly, we saw in the 2000-2002 downturn, the dollar actually got stronger. 2007-2009 got stronger again. I'm thinking it probably will do here, and we've seen over the last few months the dollar's come right back up again, as I predicted a few months ago. Whether it's going to top out and go higher or not, I don't know. But potentially that is a likely event, seeing as how the dollar got stronger through each of the downturns previously. Looking at individual stocks, I've identified 8 stocks that are in a bubble in the Dow. That's over a quarter of the stocks in the Dow. The first 3, Apple, Boeing and Amex, have all kind of reached their top and crashed quite significantly down. Home Depot, United Healthcare and Visa, quite differently, they've actually reached all-time highs recently, and they're at the top of their peak in their bubble. Nike and Disney have reached their top and have come down a little bit from their top. Just looking at some of those, Apple, Boeing, Amex, Home Depot and United Healthcare. This is a bubble in Apple. I predicted way back in the beginning of last year that the top was probably around about there. It went about 5 trading days later, reached almost the top there. Traded sideways and then went down, so that bubble burst. They came down. The dotted line is the bare minimum that the price needs to come down to reset the bubble, and all bubbles need to reset. And it hasn't actually got to that point. It just keeps bouncing off it. And if we go through April, June, August, and now to October, we've seen quite an interesting rally in Apple. If we look at that, now this is a weekly chart, if we look at that on a monthly chart, very much like the Russell 2000, we see a phase 1 change in direction, phase 2, 9 candlesticks coming down, we see a rally upwards, but phase 3 on a downward momentum is still in play. So the question is, does this rally end up going higher and breaking that downward move, or does that rally fail at some point and continue down more significantly? I don't know at this stage, we'll have to watch that, but it could possibly follow the same direction as the Russell 2000. This is Boeing. It's crashed down from a high in early last year, reached a 35% drop. It's traded mostly sideways since that point. Home Depot, that's one of the ones that's created an all-time high. That's been going up. Window 2, at the end of window 2, it reached a high and has come down since there. So it's been very strong this year. American Express crashed from its high in 2014. Has come down almost 50%, and has come up a little way from that low. Interestingly enough, both Visa, MasterCard and American Express, all 3 credit card companies, have all been in a bubble and have all grown exponentially over the last few years. United Healthcare, another one that's grown very well over this year, is now at an all-time high. As well as those stocks in the Dow, looking at the other indexes, there are at least 18 others that I've identified. The 4 FANG stocks have each been in a bubble, and 3 of those, Facebook, Amazon and Google, are at all-time highs at the moment. Biotech stocks have all been in a bubble, and other stocks as well. Looking just at a handful of those very quickly. Facebook, I thought had topped out at the beginning of this year. It's actually gone higher still, and has created all-time new highs recently. Amazon, same thing as Facebook, creating all-time new highs, and Google as well, all-time new highs. But they're still in a bubble, and at some point that has to crash, and they're going to come down 30 to 50%. This is Valiant Pharmaceuticals, come down 90% and has just dwindled on the bottom. Dishnet, similar sort of thing, it's crashed 50%, 53%, but it's come up a little bit from that low, but it's gone down below the dotted line. Tesla, very wildly traded and a very volatile stock. It's come down 50% and almost retraced right back up to its highs again, then it's come down. The question is, has Elon Musk made the right decision buying Solar City? We'll find out if he's made the right decision or not. This is a classic view of a bubble. This is 3D Corporation. It reached a top end of 2013, beginning of 2014, so quite a while ago, up 1,000%, down 90%. A very sort of classic shape, and the model found the top of that bubble using the mathematical model as well. Three stocks I'm going to include here, which I didn't actually have at the right earlier on. 3 banks. So HSBC, it formed a bubble in the late 1990s. There was a stock split, so that red circle was a stock split, so it wasn't a crash. It just basically was, I think, a 3-for-1 stock split. And then it's come along from the lower stock value. But it actually dropped 70% from the high in the early 2000s to the low in 2009. And it was in a bubble, so having grown exponentially through the late 1990s, it had reached a technical bubble. And this has come down sharply. Two banks that fared even worse than that. RBS, huge bubble up to 2007, colossal crash, and has dwindled at a very low value, very much like Valiant we saw earlier on. It hasn't really gained anything like the prices it had earlier on. 95% drop. And then Deutsche Bank, similar sort of thing, had a peak in 2007, crashed down 2009. It came up quite nicely, but then dwindled down and retested and gone below the low of 2009. So it's about a 90% drop. Where it goes from here, Daryl asked me, is it going to go to 0 or not? Fortunately, the model doesn't tell me that. I can't know whether it's going to fold as a company. It's such a huge bank, it's probably going to be rescued. However, that rescue is sort of materialised. But certainly, at the moment, the bubble has crashed and has come down way more than you'd expect. But 90% does happen sometimes. Very quickly looking at some of the global markets: Japan, China, oil, gold, and then a couple of the commodities: nat gas, copper, coffee, and uranium. Japan, going through to October, has just traded sideways from its high in the middle of last year. China, at the end of last year, I thought it would fall at least another 1,200 points, and it did do that quite quickly, and it's been slowly meandering up since then. That's where we are now. It hasn't really traded too far this year. Long-term view, you've got 2 peaks: 2007 bubble, 2015 bubble. That's 2007 top, 15 top rather. I've looked at various bubbles internationally, international indexes over the last 100 years, and there are certain characteristics which are very consistent with all bubbles, and that is that 100% of bubbles all go below that line as a characteristic of this particular bubble here. 95% go below that line, so it's only a small number even go in that range. And then about 35% go below that line, which means 60% of bubbles go down to this kind of range here, based on characteristics of the bubble. And therefore I'd expect China to come down at least to that range, if not lower, which is 30 to 50% from where it is now. So just the significance of this is that we might see at least a further 30 to 50% fall. This I'd calculated in April 15th this year. However, we're pretty much flat from there now, so it's the same applies now as it did back in April. Oil, we saw a bounce at the beginning of the year. And same as we've seen a March low last year and a failed rally. We had a February low this year, and that rally did not look strong. and although the oil price has risen very nicely during that period, it's never really gained a very strong momentum through that period. So I did have a window 7 that I thought the oil price might come down to. It came down not all the way, but it's come down into that window and then bounced up the other side. And right from that beginning of the bounce point there's been no really strong momentum on the weekly chart, which I would like to see to confirm the bottom. So the price is meandering sideways at the moment, as all the various OPEC and non-OPEC companies jostle for position in the oil production game. The reason why I thought that we might come down to window 7, there was a certain formation there, which was the point at the tip of that particular wedge. We saw was near the OPEC meeting in June. We had a downward move into August last year. I thought we might see the same this year. We did see that drop, but it didn't come down nearly as far as I thought it would, and it's come sideways. The weakness on the rally, if you look at the weekly chart of this particular ETF USO, got a break point there on the upward move and a break point there. And we've not actually seen any strength in terms of a completely phase 1 and phase 2. What we have seen since this point, I haven't got it on this chart, is we've actually seen quite a strong downward move. So we've seen a phase 1 and phase 2 downwards. So at the moment, even though the oil price is moving up, the downward pressure seems to be a little bit stronger than the upward pressure in terms of consistency of momentum. So we may see a downturn into early next year. I'm not sure at this stage, but certainly the strength I'd like to see, I'm not seeing in the oil price. This is a monthly view of the oil price. Phase 1, phase 2, phase 3, down to candlestick 7 there. We had a downward move in volume and an upward move there, but it failed. Same again here, with a downward move in volume and upward move there. Hasn't really gone as strong as I thought it would. I said back in May that we might see candlestick 8 form at that point. We didn't quite see that, but we have come down somewhat and formed 8 and 9. The question is, are we still going to form candle 13, and where will that take us over the next sort of 3, 6, 9 months? And this is gold, formed a bubble way back in 2011. That was the line that I would expect to go down below, which it did. So resistance at that point, which became support at this point over here, where it formed the bottom end of last year. Drop of almost 50%, 46%. Just focusing on the last few years there, we had a drop down to end of last year and a bounce back up, very rapid rise, huge volume, and the price of gold rather has gone up significantly since then, come down a little bit recently. But that's quite a strong rally, so I haven't seen any weakness in that one like I have in oil. So the gold rally seems to be strong and sustainable. I'm not sure what might bring it back down to retest. Potentially a sudden drop in the equity market, people might be forced to sell gold, but certainly at the moment the gold rally looks strong. Look at the monthly chart for gold. There was a move down in 2011. That failed phase 2 with a sharp rally. Then we had phase 1, phase 2 and phase 3 again. Down to candlestick 11 at the beginning of this year. Decrease in volume, increase in the price. I thought we might see a downturn to candlestick 13 like that. It didn't actually happen. We've got candlestick 12 and the market's gone up. The price of gold has gone up and sideways. And there we are at the moment. Not sure if we will come down from that point. Just looking at the last few now, get nat gas, long-term view of nat gas, and looking at the last few years, it came down, saw a bounce point in February, and we've come up since then. Very nice rally, 50 or more percent, 50 to 70% rise from the bottom. Copper, retesting that low of 2007. Look at the last few years, again sort of bounce point, similar sort of time as with nat gas, February time frame, bouncing up. Although copper hasn't come up very far, it's actually staying fairly flat. Copper tends to be quite a good indicator of the global economy, so if it's not rising up in the same way, that potentially suggests there's something a little bit amiss. Coffee, coming down, retesting that low and going lower. Look at the last few years, as with the other commodities, a bounce in earlier part of the year, then an increase up, and quite a nice rally from there. Lastly, look at uranium. We had a very high point back in 2007, and a rise with the Japanese disaster, and then a crash with the disaster. I said that we would see a downturn in the early part of the year. It's actually gone much further than I thought. If you look at the last few years, we've come down consistently almost every month. We come down June, July, got to candlestick 8 back in August. The question is, will we get to candlestick 30? We've actually got to candlestick 11 now, so that particular downturn may be close to ending, in which case uranium might become a reasonable investment in coming weeks and months. But we might get a couple more lows to try and complete that phase 3 there. We've had a drop of 32% since the end of last year, and a drop of almost 40% from its high certainly high back in 2014. And just very quickly looking at DBC, which is commodity ETF, looks at 6 specific commodities: heating oil, crude oil, gold, aluminium, corn and wheat, with a combination of the 3. It has come down and bottomed at the same point as some of the most of the other commodities have early part of this year. So it looks like that might be a firm bottom in price, and we might see a rally up continuing from there. Just looking at the last few years, perhaps that bottom again early part of the year, and then the rally coming up from there through this year. If you're interested, please sign up and receive my newsletter and any articles I publish. You can come and see me in the break, or come and see me after the presentations. I'll just give you your name and email address. That's all I need from you, and then I can put you on the distribution list. Otherwise, thank you very much. Thanks for listening. Any questions?
One quick question. We've run out of time.
Yeah, you come and ask me in the break.
Ran over us.
In the break, by 1 minute. I ran over by 1 minute.
That's right. But in the break, he'll be here in the break. And afterwards, you can come to the bar. He's like very talkative after he's had a couple of He'll spill anything. So we're really tight for time. We have to get out of this room. So the presidential election, you're going to decide who wins. I would give you it's a very tricky situation. Everything you've read in the press and heard on TV, you should consider 90% to 95% of that's totally wrong and a complete fiction. So contents of this presentation, don't buy or sell anything basically. Okay, here's 4 presidential candidates. There's actually 5. There's Trump and Hillary and then Jill Stein and there's Gary Johnson. And there's some guy named Evan McMullen, who gets a lot of press, even though he's only on the ballot in 11 states, and is only has any significance for one state. The press actually covers him. So you have to say why is this? Who is this guy? He's a former CIA agent. So here's the picture.
If I don't have a picture of him.
What? No, we don't have it. We didn't dare publish it. So anyway, okay. It's a highly unusual election. You know anything about U.S. election history, this is totally off the charts, off the walls. There's nothing like it. In most cases we've had now, even in years ago, there really would be 2 candidates who were really spokesmen for the spokespeople for the establishment, and they'd be slightly different, and so whoever won, it's okay with the sort of elite interests. They had their voice. And the 2 candidates who were supposed to be running this year were Hillary Clinton and Jeb Bush. And Jeb Bush now is basically endorsed. If they're so different, he's basically endorsed Hillary Clinton. You know, the difference between them was like this. So whoever won, it would be okay with the elite, right? Then that's how the game was supposed to go. Then Donald Trump comes along and throws up the chessboard, all the chess pieces go flying in the air, everything goes crazy. Yeah, they didn't figure he was going to show up, but they didn't figure he would last, they didn't figure anything would happen. And they were wrong and wrong and wrong. And there's lots of analogies between this election and Brexit in the UK in June. Very similar supports for Trump and issues for Trump. And I wrote an article for Seeking Alpha, explaining this is actually a global phenomenon. They have so far censored that article and refused to print it. And so that's why I'm probably going to publish it elsewhere. And in that article, I mentioned what would happen if Trump won and what happens if Hillary won. Just the mention that Trump could win, not that he would, got that article censored. And that is very, very disturbing. And it tells you what's going on in the greater media. Trump stuff is censored, and the Hillary stuff is also, bad stuff about her is also censored. And that's very dangerous for any democracy. And I say here, the media's turned into a propaganda machine. If you know, they've definitely made up, I've written a book about Trump, as I said. They've definitely made up things. And in that book, actually, the thing to register Muslims, that story's made up by the media. He never said any of that. And there is a video, there's some reporter tagging along with him, he's signing autographs. And he's saying, what about these Muslims? Shouldn't we register them? And he says, what, huh? Oh, yeah, I guess, I don't know. And then the big story comes out that Trump insists on registering Muslims. He wants them all out of here and blah. And nothing. He had nothing to do with it. He never said this. So they